Hello students. In my previous video, I have explained about national income and its related aggregates. In this video, we will discuss about national income accounting. Okay, national income and national accounting, both these terms are different. National income means the money value of all final goods and services produced in a domestic territory in a financial year. And national income accounting, national income accounting refers to all kind of methods which we can use to measure national income. Okay, and in this video and in my further videos, we will discuss about national income accounting. It means we will discuss different type of methods for using measurement of national income. In my previous video, I told you that there are three methods to calculate or to estimate national income. First method is value added method. This method is also known as product method. Second method is income method, and it is also known as factor income method. Third method is expenditure method, and this method is also known as total outlay method. Okay, and we also have discussed about different type of aggregate terms, national income aggregates like GDP, NDP, GNP, NNP, GDP at factor cost, GDP at market price. Okay, so the national income which can be estimated with the help of value added method, it is in the term of GDP Mp. It is in the term of GDP Mp. It means gross domestic productivity at market price. From income method, the national income which is estimated by this method is in the term of NDPFC. Only this method gives you the national income at factor cost level, at factor cost. NDP means net domestic product at factor cost. NDPFC is also known as domestic income. It is also known as domestic income. Third method, expenditure method, it gives the national income in the term of GDP Mp or in term of NDP Mp. Okay, we will discuss these two methods later. In this video, we will discuss value added method or product method. From value added method, we estimate national income in term of GDP Mp. GDP Mp is also known as gross value added, and gross value added or GDP Mp, it can be estimated with the help of this formula. Okay, and the formula to calculate national income by using value added method is value of output minus intermediate cost or intermediate consumption. Value of output can be calculated by adding sales and change in stock. Okay, if value of output is not given and sales and change in stock is mentioned in the question, in that case you have to add both these terms, and by adding these terms you will get value of output. Value of output आप कैसे calculate करोगे? Sales whatever is given plus change in stock. Okay, minus by adding these terms and by subtracting intermediate cost from this. Change in stock. We can estimate change in stock with the help of closing stock and opening stock. If change in stock is not given directly, in that case closing stock will be mentioned and opening stock will be mentioned. Okay, so to know what is their change in the stock of the economy or for a producing unit, you should use closing stock minus opening stock. Okay, closing stock minus opening stock will give us change in stock. Now the formula to calculate GDP MP. To calculate GDP MP is sales plus in bracket closing stock minus opening stock minus intermediate cost. We will use this formula to calculate national income in term of GDP MP by using value added method. To understand the estimation of national income, we will go through with a numerical example. The question is calculate gross value added at factor cost by using value added method. In this question, we have to estimate gross domestic product at factor cost. Okay. To estimate all these values, we are given some items. That is, first item is units of output sold. That is 100 units. Second item which is given, it is price per unit of output and it is 30 rupees. Output which is sold, it is 1000 unit and it is selling at 30 rupees per unit. Third, depreciation. Depreciation is 1000 rupees. Intermediate cost is given 12,000 rupees. Closing stock is 3,000 rupees and opening stock is 2,000 rupees. Other than excise and sales tax is given, excise is 2,500 and sales tax is given 3,500 rupees. We will use all these terms to calculate GDP at factor cost. Now, the formula to calculate GDP at market price by using value added method. Okay, it is value of output minus intermediate cost. Value of output is not given in the question. Instead, it is sales output sold in the market and the price per unit it is given. Okay, value of output can be estimated by using the formula sales plus change in stock. Sales is also not given. Instead of sales, output sold is given and the price per unit is given. The output, it is 1000 units and the price is 30 rupees per unit. By multiplying both these terms, we will get total sales value and it is equals to 30 multiply 1000. It is 30,000. एक बार फिर से समझ लीजिए. Value of output. Okay. By this way, we have estimated total sales value and these sales value will be used not only value of output is given but and value of output is total sales is also not given. Now the formula instead of sales GDP we have is equal to sales plus change sold in stock minus intermediate cost and the price sales is 30,000. Change in stock, okay. Closing minus value of output we require sales and change in stock. Minus to calculate intermediate sales, cost, we require output sold and 30,000 plus 1,000 minus 12,000 and the total value is 30,000 minus 12,000. 31,000 minus multiply price per unit. Output is having 19,000 in our hand. Units as GDP price per unit is 30 rupees, but in the question output is sold at 30 rupees gross unit 1,000 units are sold. By multiplying both these terms, we will get the value of output, that is 30,000. GDP at MP by value added can be calculated by sales plus change in stock minus intermediate cost. Sales is given 30,000 जो हमने कैलकुलेट किया अभी. चेंज इन स्टॉक can be calculated by closing stock minus opening stock. Closing is 3,000, opening stock is 2,000. Okay. Minus intermediate cost, it is 12,000. Now, sales 30,000, closing minus opening का difference, it is 1,000 minus 12,000. 30,000 plus 1,000, 31,000 minus 12,000, and we are having 19,000 as GDP MP. 19,000 rupees as GDP MP. By using value added method, we have estimated GDP at MP, and it is, the estimated value is 19,000 rupees. Now we have to convert GDP at MP to GDP at FC. Okay. To convert market price value into the factor cost, we need net indirect taxes. Factor cost plus net indirect taxes gives the value at market price. Okay, but we require factor cost value, so net indirect taxes will be transferred to that side, to the other side, और जब ये ट्रांसफर हो जाएगा तो NIT जो है ये क्या हो जाएंगे, माइनस होंगे MP में से. फैक्टर कॉस्ट गिव्स इक्वल्स टू मार्केट प्राइस माइनस NIT, मार्केट प्राइस वैल्यू माइनस नेट इनडायरेक्ट टैक्सेस, एंड नेट इनडायरेक्ट टैक्सेस इक्वल्स टू इनडायरेक्ट टैक्सेस माइनस सब्सिडी. ये आपको ब्रैकेट में लेना है. ओके, नाउ वी विल पुट दिस वैल्यू इनटू आवर फॉर्मूला. GDP factor cost equals to GDP at market price minus NIT. NIT की वैल्यू हमने यहाँ पर रख दी है. GDP MP माइनस NIT की जगह पर हम यूज कर रहे हैं IT माइनस सब्सिडी. ओके, वी आर यूजिंग IT माइनस सब्सिडी. अब यहाँ पर सब्सिडी हमारे पास में कितनी दे रखी हैं, सब्सिडीज नहीं दी हुई हैं. सब्सिडीज आर नॉट मेंशन्ड. If subsidies are not mentioned, in that case we assume that subsidies are zero. हमारी जो सब्सिडी है वो कितनी है, जीरो है. ठीक है, तो यहाँ हम सब्सिडी की जगह पर जीरो वैल्यू रखेंगे. नेक्स्ट, इनडायरेक्ट टैक्सेस. डायरेक्ट आपको इनडायरेक्ट टैक्स नहीं दिया हुआ है क्वेश्चन के अंदर, इनडायरेक्ट टैक्स कोई टर्म नहीं दी है, बट इनडायरेक्ट टैक्स की जगह पर एक्साइज ड्यूटी दिया हुआ है और सेल्स टैक्स दिया हुआ है. Okay, so excise and sales tax are also a form of indirect taxes, so we will use both these terms as indirect taxes. GDP MP minus excise minus sales tax, and excise is mentioned 2,500, 2,500. Okay, and sales tax mentioned 3,500. तो 19,000 माइनस 2,500 माइनस 3,500, 2,500 and 3,500, it is equals to 6,000. So 6,000 deducted from 19,000 and we will get 13,000 as GDP FC. This value is our gross domestic product at factor cost. क्लियर है? इज दिस क्लियर? GDP FC फैक्टर कॉस्ट पे लाने के लिए आपको मार्केट प्राइस में से नेट इनडायरेक्ट टैक्सेस सब्ट्रैक्ट करने होंगे, एंड नेट इनडायरेक्ट टैक्सेस आर इक्वल्स टू IT माइनस सब्सिडी. If subsidy is mentioned, then in that case well and good, but subsidy is not mentioned or not given, in that case we assumed that subsidy is equals to 0. Okay, and we have taken subsidy as 0. And IT, instead of IT we have given excise and sales tax. Excise is 2,500 and sales tax is 3,500. Okay, 19,000 minus 2,500 minus 3,500, and जो negative values है we will add negative values first. 2,500 and 3,500 equals to 6,000. Okay, 19,000 minus 6,000 gives 13,000, और ये 13,000 जो है हमारा GDP है किस पर, FC पर.